Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gerdes. You're going to want to text the word seller to 623-AZ-RECON. That's seller to 623-AZ-RECON. Ryan, on a personal note, it finally happened.
Uh-oh.
Finally happened. How long?
I was going to say something really rude, but go ahead.
I can think of three things that I can.
Nope.
This is a family show. But we've now been doing this show for several years now, and we've been working with Justin for even longer than that. Mm-hmm. And I finally saw the inside of his house. I got invited to his house.
No.
Oh.
Wait. He's saying that he finally got invited. How long?
Yeah,
I mean,
right.
yeah,
Yeah,
we know. We know that's not true.
We all know.
We
the
have
truth,
multiple
So
sources.
you have a very nice house.
Thank you.
By the way.
Yeah.
Thank you.
Yeah.
It does.
Appreciate it.
All right. I didn't get offered a cocktail or anything.
No, I was scrambling because I had to get back to work.
Yeah, right. Yeah, Justin and I invested in a cow.
Yeah.
And so we were divvying up the meat. It was fun.
It was fun.
That's cool.
All right. Anyway, so there's a lot of questions about the real estate market and inventory and our home prices dropping and what the heck is going on. And so this is an interesting report by Redfin. And I'll just read the headline. The U.S. housing market has nearly 500,000 more sellers than buyers, the most on record. So there are 34% more sellers in the market than buyers at the end of the day. Ryan explains a lot.
So these are national numbers. So what it hasn't done is it hasn't really defined where the majority of the surplus is, because there are definitely some markets where there isn't surplus. Mm-hmm. I dare say that there's areas where there's more demand than surplus in parts of the valley. But there are definitely some areas where we're seeing homes sit, and we're probably going to see them sitting even longer here in the near future, until either interest rates get going or until new home builds start to run out of inventory. There has to be a number of things that need to happen in order for that surplus to not exist anymore. We're starting to see some more deals coming down the pipe for particularly the suburban areas, and so there's been a lot of great opportunities. So for me, like, I'm always investing, right? But it just kind of depends on what I'm investing in at that time. Like for me right now, I'm more interested in most of the flips, but I am starting to merge over into some of the long-term holds because we are starting to see rental prices converge with what it's going to cost in order to own. Because that's been a big issue of ours for a while now, is that it was more expensive to own than it was to rent. And so we're starting to...
And that was even with 25% down.
Right, yeah. I mean,
right.
Obviously, if you go and you buy something cash, you don't have a mortgage, and all you have is insurance and taxes, maybe an HOA, but still, you're going to be able to lease it out for a heck of a lot more than what your monthly nut is on it. All that being said, most of the time, investors are putting down 25%. And so if you're basing that off of that and the interest rates that go along with that, you're usually not going to have a whole lot of passive income, if any at all. And so because we're seeing that and people have decided to do more rent, to lease, and a lot of these hedge funds have been liquidating their portfolio, we have actually been seeing rents go up a little bit. And we've been seeing, since prices have gone down a little bit, starting to converge. And I think that we're going, by the end of the year, probably see a very, very balanced market when it comes to that. And then by the end of next year, it's probably going to be back to a point where it's going to be more expensive to rent than it is to own, depending on what happens with interest rates and depending on what happens with the overall market.
And that really is the crux of all of it, Justin, it really just comes down to interest rates. I think interest rates are a direct result of what we're seeing. We're seeing a lot of buyers being very, very shy about getting into the game because rates are high. And according to Redfin, they expect home prices to drop 1% by the end of the year. And I'm thinking, that's it?
Yeah.
Like that would hold you back
1%.
1% from buying. And to Ryan's point, I don't know if I necessarily agree with this because, well, it goes back to interest rates. Depends on where interest rates are. at the end of the year. If interest rates do drop significantly, if it's a point lower than what it is today, I think it's going to become a seller's market.
If you look at the historic average of interest rates, though, we're on the low side of that. We're below that average, even with that long period of time of just a dream rate of over a decade. We had dream rates, and I just think we've been so spoiled. I don't know, after going through this last 5 years of, hey, inflation's high. Rates are going to come down. Rates are going to come down. We've seen that prediction happen, every quarter of every year since 2020, early 2021. And, I sit back and look at how the economy is going, where we're getting at in inflation. But there's all these variables that just keep popping in. And it's like, yeah, we start making an improvement, and then Israel and Iran start bombing each other, and then rates just go right back up. It feels like there's just so much dramatic events that are happening. I just don't know if that's ever going to happen. So I think that we're going to be stuck in these rates for a while. And yeah, I do. I think new builds have a big role in what's happening here.
For areas like ours.
Yeah, sure. Especially. And what I see up north, in the northern part of the country, is I'm still seeing appraisal guarantees. I'm closing one on Friday. Had a $2,500 appraisal guarantee.
Explain that.
Okay, so a home was listed for $220. There was a bidding war on the property. Got under contract for $237 with an appraisal guarantee of $2,500. Basically, whatever the home appraised for, they were going to pay $2,500 more, up to $237 for that home. I think there was. I want to say that there was more than 10 offers on the property. I talked to the listing agent. This is up in Michigan, but I've done multiple deals in Michigan in the past few years, and it's the same thing. It's wild, and we're over here, but we have a lot more room to build. We are building a lot of properties out here, and the new builds are able to offer these incentives to bring people in. I think it's going to take sellers to realize what they have to do to compete with these new builds and start to get rid of some of that inventory. I think people are holding on to what they saw their values do in 2020, 2021, and it's not the same market. I feel like even it's hard conversations for you guys to have with sellers, but I think it's taking the right sellers to realize what they got to do to make it happen.
Well, if you are a buyer, in my opinion, there's a lot of opportunity for you. And we'd love to have that discussion with you. We'd love to help you understand how we see the world of real estate, especially in the Phoenix real estate market, and talk about our systems and our strategies on how we get you the best deal possible. If you'd like to have that conversation, go ahead and text the word seller to 623-AZ-RECON. That's seller to 623-AZ-RECON, or just type in seller in the comments section. So I don't know. Ryan, I know I'm pretty confident that you agree with me. We hear the term uncertainty, and the media keeps talking about how the uncertainty of the market, the economy, what's going on, with Iran and Iraq and things like that. I look at those events, and I look at these times as opportunities, because like I said, like we said, there's 500,000 more sellers right now than buyers. So what that tells me as a buyer or as an investor, that's just less competition to me. Because if we do, I don't know what for you, Justin, I mean, are we going to see, do you think, at the end of the year, a 5 in front of rates?
I don't think so. And I mean, there was a recent prediction that we were going to see low 6s. I really highly doubt that we're going to see low 6s by the end of the year. We've been in this same scenario for about 2 years at where we are on inflation numbers. It hasn't moved, and no, I don't see it.
I would say that I've been seeing a lot more reportings of unemployment. A lot of layoffs have been occurring, not just here but nationwide. And so I do think that there might be a little bit of.
We'll find out tomorrow.
Yeah, well, I mean, everyone likes to report whatever they want to report,
Yep.
right? And 82% of statistics are made up, right?
Yeah.
So we'll see how that takes, how that impacts the market. But the thing that I'm not seeing in here is how people are combating these interest rates. Excuse me. And the way that they're combating them is the way that we've been talking about for years now. We're having huge concessions in order to buy down rates. And so this is just looking at purchase price. But I can almost guarantee you they're not digging into the weeds, calling up the buyers and the sellers of these saying, hey, we see that there's an FHA loan here. We can see that. But there's no disclosure on whether or not there's a 6% concession there, because that 6% is huge. And they're talking about a 1% adjustment on this by the end of the year. It's like, okay, well, if interest rates do soften a little bit, then people aren't going to need as much concessions, and then that's going to counterbalance that out, because there's a lot of numbers in here that is not being reflected as far as
100%.
You know what I mean?
Yeah, because that's an interesting point. Because back to what we said, Redfin expects home prices to drop by 1%, and my response was, well, that's it. But there's a lot more into it. If interest rates, or purchase prices don't drop. In essence, if sellers are giving up all of these concessions, more so than they have over the last couple of years, you know what? Home prices have dropped.
Right. Like if I sell a property for $1 million, but I'm giving away $900,000 in concession, I didn't sell that house for $1 million.
Yeah.
And I know that that's an extreme example, but there's a lot of money that's going from one pocket to the other. And so really what it boils down to is, what is the seller actually netting, not what is the purchase price.
And all this talk about interest rates are more of it's a bigger deal over the 30-year loan or a 15-year loan than the purchase price. So we have a lot of buyers that come to us and are like, I want to lowball this. I want to take it down 30 grand on the purchase price, and that's going to make my payment better. In reality, if you got that $30,000 towards the interest rate rather than to the purchase price, you're going to get more bang for your buck in the concession than you will from reducing the purchase price of the home. You're going to have a lower monthly payment. So I just want everybody to realize that's the point we're trying to make here with interest rates.
And so when we sit down and have these conversations, it's what are we trying to accomplish out of the purchase of this? So if you are planning on staying in the property for 2 to 5 years, then don't pay down a ton towards your interest rate. Maybe do a 3-2-1 buy down rather than a permanent buy down, and then go to work on the purchase price. But if you're planning on this as your forever home, or even after you've moved out of it, you're going to use the 401k plan and use it as an investment property in perpetuity or however long, then go over there and get 6% in concession, pay the full purchase price, so that you can combat that interest rate as much as possible. Because, like you said, I don't know that we'll ever see a 5 in front of an interest rate ever again. I mean, maybe.
I think there'll be short periods of time that we'll see it, maybe once or twice a year, but it's not going to be a consistent rate. I don't think.
Yeah, I think 6 is.
Unless the world's in shambles, just like we were talking about this week. Yeah.
So, we'll see.
Excuse me. I think these are really good points, because we're getting into the weeds. But what we're really doing is just that's what I love about it. We just talk like we talk with our clients, and these are the strategies that we put into place, and that we're advising, especially our buyers right now, on how to take advantage of all the different options on the table. And if you're working with an agent, I'm hoping that they're having these same types of conversations about rate buy downs and really just, what's the difference between doing a rate buy down as opposed to just knocking off a chunk off the price of the home. And then what we're seeing, Ryan and I are seeing a lot of, we're getting, both. We're getting a chunk off the home, and we're getting the concessions.
Like if I was buying a resale home right now, I wouldn't use any of the money towards a permanent rate buy down. I would use it towards a 3-2-1.
Yeah.
Because I do think that even though we're not going to see anything consistently in the 5s, we'll see low 6s, in the next few years. So I think that that's a pretty safe gamble. And at that point, then you can use your equity to do a further permanent rate buy down
Yep.
when you do that refinance.
All right.
So just a quick story. Actually have my sister-in-law, kind of sister-in-law.
How does that work?
Yeah, I'll explain that later. She's looking at purchasing a new build, and her and her mom came in the office. We started talking, and she didn't quite qualify for the purchase price. And I'm like, well, have your agent go talk to the new build because they're desperate. They're offering 6% concessions. And I said, they're already built homes and they're quick move-ins. She said, yeah, and they're trying to close out the community. I'm like, go in there and offer them, $50,000 under, and just see what they say. The worst thing, she said, no, she doesn't do stuff like that. And I said, why are you using this lady as your agent? And we've been really good friends for 32 years. And I'm just like, what is going on?
I got that same story just the other day.
I just can't. She's family, and I'm like, I have people that can help
She's
you.
kind of family.
She's kind of
Yeah,
family. I'll
that's what
explain
she's
that.
kind of. Yeah.
No, I mean, she's family to me, but yeah.
All right.
So yeah, I had that same. I was talking with a gentleman at this event that we had going on. And he said, "Well, it seems like you're doing good stuff here, but we have a family friend, and she would just be devastated if we didn't hire her to help us." And I was like, "Well, the age-old saying, that everybody knows a dozen and one different real estate agents, and so." It's a difference of having a good friend in the business or having a friend that's good in the business. You choose, because 9 out of 10 times it's going to be the first one.
It's not the stories that we tell of what we're doing for our clients. We're walking into the builders and taking advantage. I love it. I mean, dude, I freaking right now, I love working with buyers. I love walking into that negotiations and going, okay, can I one up my last one? Right?
Yeah.
It gets me excited.
And I think the on-site agents like it too. They like going to battle and negotiating and getting into the game of chess on it. So I love it. I'll do it every time, even if they don't ask me.
All right. Well, we will do it for you. If you are a buyer right now, there's a lot of opportunities to take advantage of the sellers right there, right now. And we just have some very, very specific and unique strategies, especially when it comes down to negotiations. And we'd love to have that conversation with you. All you got to do is text the word seller to 623-AZ-RECON. That's seller to 623-AZ-RECON. Or you can just type in seller into the comment section, and we'll reach out to you.